Let's get a check very quickly. Citigroup just out with its earnings. Wilfred Frost is here. He has the numbers on that. Will?
Hey, Becky. Yeah, so unlike some of the others, it's actually a slight beat on both the top lines. Revenue 20.7 billion, expectation 19 billion, EPS 105 per share, expectation 104 per share. The main reason for this is higher exposure to fixed income trading, which has been very strong throughout than perhaps some of the others have had, but they still have a significant reserve build in the loan area. So overall, still the same kind of concerning theme I think you'd have with all of the banks about the outlook for the economy. Let's just go into some of those numbers. I'll do firstly the trading. So fixed income, commodities, currencies, 4.8 billion. The expectation was for just under 4 billion. Equities also a nice beat, 1.2 billion. Expectation for was about 1 billion. So that was the positive. In terms of the provisions for credit losses, that was $7 billion. The same number a year ago in the same quarter was just $2 billion, so quite a big increase there. So where do they stand now in terms of their total reserves versus total loans? And we've got some comparisons here across the banks. Citi's going up by 1.1%, 110 basis points to 2.9%. There are some of the others that we've talked about through the course of the last day or so. So Citi's is slightly bigger. As we mentioned earlier, they've got quite a big exposure to credit cards. That's probably a factor. We'll try and get into that when we get onto the calls. They mentioned the PPP program, 3 billion in applications. So that's quite a lot lower than in terms of applications and dollar amount than we've seen for the likes of Bank of America or JP Morgan. No hard dollar amount in terms of what they've paid out yet. Again, we'll look for that on the call for Citi. At the moment, the shares are down 2.7%, as you guys have been saying. For the rest of the market, declines today, offsetting gains yesterday. Of course, that doesn't apply for the banks. All of the banks declined yesterday, adding to those declines again today. Becky.